everybody off. I don't know if that's necessarily the right thing to do, right? But then that's a value judgment. I kind of think if you're making 5 million, you're doing pretty well. Why do you have to make 7 million? But that's not the world we live in. We live in a world where people feel like you have to have as much money as possible, and I don't agree with that. All right, so let me do something here. I'm gonna pull up the I'm gonna grab CNBC and take a look at that. Okay, so it looks like that jump of 400 points that the market started off with has declined to just 200 points, and but the reason that the market has jumped today is because there is some belief that inflation has finally peaked. Um, and that's interesting. And I'm gonna just read some of this to you, and then we'll kind of talk through it. They said that there was a lighter than expected consumer prices report for November, which raised expectations that inflation is peaking. Doesn't mean it's going down; just means that it's hit a peak, and it looks like it might be headed on a downward cycle, right? So the consumer price index rose just 0.1% from the previous month and increased 7.1% from a year ago. The Labor Department reported Tuesday. Economists surveyed by Dow Jones have been expecting a 0.3% monthly increase and a 7.3% 12-month increase. So pay attention now. What they're not saying that inflation actually went down. They're saying that we knew it was going to go up. We just thought it was going to go up more than it actually did. So inflation still went up. Right? So prices are still going up. They're not really going down. But remember, the stock market is a forward-looking indicator, which means that the market doesn't look at what the economy is doing right now. The market looks at what it thinks the economy is going to be doing next based on what it's doing right now. So when you see it kind of hit a peak where it's not going up as fast as it used to, you're thinking, okay, maybe that means it's going to start going down. It's going to hit the other side of that mountain. But that's a big assumption. That's a big if. And expectations are everything, right? So what drove your stock prices to go up today, why you made money today, most likely, is because the reality did not match the expectation. All right. So let me see here. Let's see, quote, let's see, so let me just read more of this. Excluding volatile food and energy prices, the so-called core CPI rose 2.2% on the month and 6% on an annual basis compared to the respective estimates of 0.3% and 6.1%. So notice that all the numbers they give have to be put into context. Financial numbers mean nothing if you don't put them into context. Every single time a number is announced, they don't just look at what the number is, they look at what it's compared to. Everything matters only to the extent that it's what it's compared to. If I say, is a guy if a man is 6 feet tall, is that a tall man? Well, yeah, maybe if you compare him, say, to the average height of an average man, I get that. But if he's in the NBA, then no, he's short. He's a point guard. He's not going to be the tallest guy on the court ever, right? So ultimately, you always want to know, what is this number being compared to. Expectations are everything, in life and in stocks. I mean, literally, even with even with running a business, it's smart business people. They set expectations at a certain level, and then they plan to over deliver, so the customer is really happy. But if you set insanely high expectations and you slightly under deliver, people are going to be unhappy, even if you delivered at a very high level. Basketball coaches do that. I remember watching Rick Pitino when he coached at the University of Kentucky. One thing he used to do is every single press conference, I noticed this in undergrad, every press conference, he would talk about the team they were going to play as if they were the best team in the country. It didn't matter that this team was 0-12 and in Division 3, right? It didn't matter. He would talk about that team like they were so amazing, they were so good. It's going to be so hard to figure out how to stop them because their offense is so strong. What I realized eventually was that he was just setting expectations. So expectations are everything. They're really important. So it says here, that was a big surprise, and markets are reacting accordingly, says Steve Sosnick, chief strategist at Interactive Brokers. Quote, today is a day where the entire bullish scenario is working. Yields are lower on the inflationary story. Stocks love the story of a less restrictive Fed, and the dollar is weaker, which also helps stocks. Okay, so he said a lot here. Yields are lower on inflation, on the inflationary story. Okay, so inflation's going down, so the 10-year yield drops, which probably helped a lot of your tech stocks if you own tech stocks. Stocks love the story of a less restrictive Fed. The Fed is not going to get less restrictive. That's the thing that they're mistaken on. They think the Fed is going to start relaxing the rate hikes because inflation is turning the corner. There's no guarantee of that. They said Tuesday's inflation report could play a key role in the Federal Reserve's next rate hike meeting, expected at the conclusion of its two-day policy meeting on Wednesday. Traders are largely pricing in a 50 basis point increase, a slight decline from the previous four hikes. So basically what they're saying is that the Federal Reserve is going to increase interest rates. They're just going to slow down the rate of increase. So this is being priced in. If they're expecting a 50-point basis hike, which is half a percentage point, and they get exactly what they're expecting, then the market won't move a whole lot. Now, if they get something different from what they expect, then that's going to make a difference. Because what's happening now is that the market is reacting to what it anticipates is going to occur. Okay. That expectation is unlikely to change because of Tuesday's CPI report. However, the lighter numbers could mean the Fed doesn't end up raising rates as high in the future, giving the economy a fighting chance to avoid a recession in 2023. That's not what I'm hearing. A lot of experts believe we are going to have a recession. What they are saying also, though, is that the recession won't be that bad. So don't start panicking. Don't freak out. Just, be intelligent with your money. Keep hustling. If you're studying how to start your business and build your business, keep doing that. This recession you might not even feel it. You might feel it emotionally because you'll watch the news and they'll say, oh my God, we're in a recession. What are we going to do? But you may not actually see it economically speaking. Whether or not it influences Fed policy tomorrow is an open question. A reaction like this is potentially saying this number will influence the Fed. If not their rate decision, which is probably 50 basis points, but maybe you get some movement in the outer months. So a lot of this is this market increase that you saw today where you were making all this money came from the fact that inflation looks like it's turning the corner, and everyone's reacting not just because of what inflation is doing to the economy, but because how they feel the Fed is going to react to the inflation. Right now, the biggest driver of stock market performance is the Fed. The Fed is kind of the major game in town. So people believe that the Fed is going to change their policy, which is the main reason that everyone's reacting this way. All right, so let me answer one of your questions. Jamila says, I'm a USN veteran. Thank you for your service, by the way. I have an opportunity to study info technology, learning how to make apps debt-free. Do you think it will be a good investment for me? I think it could be. I mean, I know that a lot of people know how to make or learning how to make apps for their business and stuff like that. And I think that a great business could be built around that. What really matters most, in my view, is what kind of business you have and how well you sell and offer your product. You could start the best. You could go into the best industry, the most profitable industry in the world, and make no money if your business doesn't know how to present the value proposition properly and get the customer to make a purchase. Or you could enter into an industry that looks like it's dying and there's not much money there and do extremely well because you're running a good business. So what I would focus my energy on is making sure that if that's what you're going to do, really do it. That might mean investing in a coaching program or some sort of entrepreneurship program or something, so you can learn how to structure the business, brand the business, all that. The Black Business School, in case you're wondering, blackmoney103.com. Blackmoney103.com is our entrepreneurship program. We have the Black Money sequence, Black Money 101 through 106. 101 is an introduction to the power of money, how money works in general, how it applies to families, things like that. It's a great program. 102 is how to invest in the stock market. 103 is how to start a strong Black business. And then we have 104 on how to buy a franchise if you want to buy a franchise to make money. So all these are available. So feel free to take a look. And the URLs are just what they are. Blackmoney101.com, blackmoney102.com. We did that way to make it easy for you. All right. So the next question is, let's see here. All right. Okay. So it looks like I did answer Rara's question. Okay, good. Did you see the Janet Yellen interview on 60 Minutes? If you did, what did you think about what she said? Janet Yellen, Treasury Secretary, if I'm not mistaken. I did not see that interview, so I'm so sorry, man. I'll try to take a look at it, but I did not see it. Terrence says, is it time to dump Carvana stock? Will their bankruptcy take their ticker off the market? Carvana is such a interesting story. Carvana is you can even find videos where people argue that Carvana is a scam because the stock price has dropped so much and stuff like that. But just to tell you the truth, a lot of times when companies' stocks decline and plummet like that, there's always somebody who's going to say it was a scam. So it doesn't mean that it wasn't a scam. It just means there's always somebody who's going to say it was a scam. right? So here with Carvana, what you see is you can look here and you see that the stock price has dropped 78% in the last 5 years. In the last 1 year, it's dropped 98%. So it was trading as high as 241, and now it's down to like $4 or $5 a share. Let me see, what was the peak? The peak of Carvana stock was 360, and that was right sort of during the pandemic. It started, it became a high flyer. Let me see, the pandemic started about what here? Yeah, here we go. Let's go back here. About here. Look at that, right? That's crazy. Look, the pandemic. This is why you gotta, why sort of getting good information can be beneficial to your bank account. If you remember, I was doing daily podcasts and we were doing our weekly class at the start of the pandemic, just like we're doing right now. And if you recall, if you go back and listen to what I was saying at the start of the pandemic when the market crashed, I don't know if can anybody tell me in the chat what I was telling you guys that I was doing. Can anybody answer in the chat? What was Dr. Boyce saying at that time, at this moment when the market had hit this big dip? I was saying, buy the dip. I'm buying the dip. I'm buying the dip. I'm buying the dip. I can't tell you what to do. This is not investing advice, but I'm buying everything I can get my hands on because everything was cheap. So then the pandemic happened, and it surprised us because we didn't know that the pandemic we thought it was going to be a destroyer of the economy, but it turned out to be this explosive stock market revolution unlike anything I've ever seen. And I've been analyzing stock markets a long time. I've never seen anything like what I saw in 2020. And so you start to see it. So look at Carvana just sort of rising with the tide. Carvana became one of the darlings of the market during that year. So during that year, you saw extraordinary returns. Look at this. I mean, you're buying the stock at 29. The stock price drops to or rises to almost 300, 278, actually 308 a year later, right? That is a massive ROI. That's 1,000% or something, right? So Carvana became just sort of one of the favorite stocks. But one of the things that happened, I noticed with companies like Carvana, Zoom, and what was another one? Peloton, is people forgot that the pandemic wasn't going to last forever. They just thought it was going to, last forever. And let me tell you what I was doing around this time. Actually, back it up a little bit. Around this time right here, I saw how much money my family we were making in the stock market because I've been a consistent investor. That's what I do. That's where I blow my extra money. Right. Some guys blow their money at the strip club. I blow my money on stocks. Right. Or not blow it. I invest in stocks. So I just go shopping for stocks the same way you go shopping for shoes. And so I had all this money in the stock market. And so what I did was I said, this is too good to be true. There's too much money being made. The frenzy is getting crazy. I started seeing signs of irrational exuberance, irrational behavior. I started seeing investors literally willing to buy anything. And it was making a lot of experts very nervous. There were a lot of people that were saying, okay, this is going to collapse at some point. This is going to collapse. The hard part about predicting the collapse is you never know when it's going to happen, but you know when the fundamentals are there. All the science, all the data, all the research can tell you exactly when you're probably going to have a bubble burst. It's just nobody knew when it was going to happen. So these people that kept saying, "Oh, the market's going to go down. I'm going to short and buy short stocks, and I'm going to buy puts and all that." They were losing their money because the market kept going up and up and up and up and up. And so right here about around this point, I said, just to be safe, let's take a bunch of our money out of stocks and let's go buy some real estate. So me and my wife went out and bought some rental property, and not even but even that market was super hot. It was really tough. We bought it when we bought a house in Atlanta. We had to fight to get that house. There were 20 other people bidding for that house. Some of them were bidding all cash. I had no negotiating room with the seller of the house. I couldn't ask them for a price concession because they were like, "We got 20 other buyers. We take it or leave it." Right? So I was like, "Okay, well, I want it. I want that house." So we bought the house. And really, it was mainly for diversification purposes. When things are going good, you never ever should ever assume that it's always going to be good. No matter how sunny it is, never ever forget that you can always have a rainy day, and you're gonna have a rainy day. And this is something that's really strange because sometimes we get so caught up in the moment, we think it's going to just go on forever. So a lot of people thought the pandemic profits were going to go on forever. Carvana might have been one of those companies. The stock rose as high as 360. There were smart people buying Carvana stock for $360 a share. Now look at the stock right now. It's literally like emaciated to the point of near death. There's talk of bankruptcy for Carvana, which is a real possibility. Now, do I think Carvana is a great long-term investment? Hell no, it's not. But do I think you can make money off Carvana? Hell yeah, you can. That's why I own it. I own it. The reason I own it is because I sell options on this stock. If you're in the Prime program, drboyceprime.com, we go all through the whole process of how to generate income by selling options. I own Carvana stock, not a ton of it, but I own enough that every single week I generate cash flow by selling options on the stock. I don't care about the upside of Carvana because I don't believe that the upside is ever going to come. But what I do is I sell options to all the people who believe Carvana stock is going to come back to life and go up. And if it does, I'll be very happy for them. Either way, I make my money. So how you work a stock is really the determinant of whether or not it works for you. Another thing that I did when I bought my Carvana stock was I bought a bunch of put options on it. So when the stock kept dropping, my put options were kicking in and they were protecting me to keep me from losing too much money. Okay, so ultimately, any stock can be a moneymaker. There are companies out there that had their best year this year when all the money was being lost by everybody else because they were simply investing in a bearish sort of way. I encourage you to learn how to be a bull and how to be a bear. In drboyceprime.com, we're a bunch of bears in that class. In that class, we're pretty much engaged in investing strategies that will make you some money if the prices go up, but they're going to make you a lot of money if the prices remain flat or if they go down. And that's appropriate for this type of economy because there's not a lot of growth out there. Buying the stock and holding it is not as profitable as it was in 2020. So some of you are getting a little bit antsy and getting bored. And I don't blame you because it kind of sucks. This is a tough year to invest. This was one of the toughest years to invest that I've seen in a long time. This is a tough year. This is just one of those days where you got to hold your nose and just kind of fight through it. And so today, I'm really happy that the market jumped the way that it did because this is where your consistency should be paying off. Okay, especially if you've been doing the things we talk about in this class. Okay, all right. So let me see. I saw somebody said Kendall says I did a roll down on Carvana this week for additional premium. Thanks, Doc. Yeah. Be really careful with Carvana though. Handling Carvana is like handling a dangerous chemical because that company could disappear any day now. And here's the thing about company bankruptcies, and this is a good point to kind of dig into, like with FTX and stuff like that. Companies that go bankrupt, they don't tell you anything until it actually happens. They don't tell you anything because if they tell you that they're heading toward bankruptcy before it actually happens, then they increase the likelihood that it's going to occur because it becomes a self-fulfilling prophecy because they become toxic. And when a company becomes toxic, all the investors bail. Everybody that's propping the company up lets go and they walk out and they try to get out first before everybody else does. So that creates a run on the bank. That's kind of what happened to FTX a little bit, besides the fact that Sam Bankman-Fried did commit actual fraud in terms of taking investor funds and using them without their permission. That's where his biggest crime is, from what I understand. But a lot of times, you have to be able to read the tea leaves to sort of know where a company stands. And so I think with Carvana, they are on the brink of bankruptcy. I don't see them recovering. I think for a company like them, it's really a matter of them having the ability to obtain the financing they need in order to survive. This is a tough environment to get banks to believe in you because they have to believe in you to invest in you. And it gets to a point where even when you increase the interest rate and everything else on the loan, the banks are like, no, we don't want any parts of this because we don't think you're going to be around. And that's when companies like Carvana start to go south because a lot of these companies were heavily built on debt. FTX was heavily built on debt. And what I want to just remind you guys is debt. I've never liked debt that much. I don't hate it. I think debt is very powerful and beneficial if you use it properly, but you got to use debt really carefully. It's like administering medication to the body. You don't overdose or you're going to die. So with debt, one thing that really bothers me is I've seen so many scenarios, especially during the pandemic, where people took more leverage than they needed to take. Like with FTX and Sam Bankman-Fried, I'm guessing that one of his other sins, in addition, the flat out fraud, breaking the rules, that's a legal issue. But just from a risk management standpoint, my thought is, could you have still been a billionaire and done really well for yourself and been much more conservative in your thinking? This is where the 30-year-old in him comes out because 30-year-old billionaires think they can do anything. They think everything they touch is going to turn to gold. So Bankman-Fried was, spending insane amounts of money for Super Bowl ads. He was trying to be connected to every celebrity. He was working on a $100 million promotional deal with Taylor Swift. They had arenas named after FTX. he was chasing waterfalls, and he should have stuck to the rivers and the lakes that he's used to, because he could have been a billionaire and still been doing very well financially without going insane that way. Now this kid, who I don't think really, I really call me a sucker, but I don't think he woke up just saying, "How do I just defraud people?" I feel like he's a just a dumb young guy, but I see it in a certain way, because I got kids his age, right? So I can see where he probably just got carried away. But what's sad though is now he's going to be in prison. Unless he lucks out, because his parents are lawyers and they're connected, so you never know how this is going to play out. But he could end up in prison for a real long time, and that just makes me sad. I'm sad for anybody that gets that. I don't. That's one area I don't agree with the criminal justice system. I don't like some of these 30, 40-year sentences. Sometimes I think 8 years, 10 years is enough torture for somebody to still have a life and still learn their lesson. But that's just my 2 cents. That's you can some people disagree. That's okay. All right, so let's see here. Jessica, what should we do if we want to invest at this point? Well, I didn't stop investing, Jessica. I bought more stock this morning. In fact, again, if you log in at theblackstockmarketprogram.com, look under what Dr. Boyce is buying. This is theblackstockmarketprogram.com. If you go to what Dr. Boyce is buying, I will show you stocks that I like right now. There's always opportunities for investment. There's not a point ever. There's never been a point where it's been like, okay, I'm done investing. It's over now. No, the best time to invest is always now. 9 times out of 10, it's always right now, because prices tend to go up long term. Same thing with real estate. You can't go back into any decent neighborhood and go back to the 1970s and find places where the property was cheaper. It's always more expensive. Every generation is more expensive. So I'm always investing, always buying stock. The increase in price today is a feel good moment, because partially it's redemption for the sacrifice you've been making and the consistency you've had, but also it could be a breather in case you're looking to make some realignments in your portfolio. Like, let's say that you were thinking about taking some money out so you could go, make a home repair or whatever. Well, it's easier. It feels better to sell the stock when the price is high, or shave some off when the price is high, than to do it when the price is low. Or let's say that you want to buy some put options. So if you're in the Prime program, drboyceprime.com, if you're in the Prime program, this is the time where I tell my students, okay, go ahead and get your put options on the sunny days. You buy your umbrellas when the sun is out, because umbrellas are cheaper when it's sunny. Umbrellas are cheaper when it's sunny because most people live in the moment. So when the sun is out, that's when you buy your umbrella. But if you try to buy an umbrella when it's raining, then you're going to end up paying a higher price, because everybody wants an umbrella when it's raining. Investors are not people who live in the moment. Investors don't walk around, using terms like YOLO and I don't care about the future and all that. No, investors live in the future. You have to have the ability to see the future. Think about it like this. Let me give you a real life example. 2017 was not that long ago. 2017, how many of you remember? Give me a yes in the chat if you remember 2017 like it was yesterday. Give me a yes or no. Does anybody sort of look back and just kind of say, oh my God, it was just yesterday, it was 2017, or just, back, 5 years ago, I was dating that person. I can't believe it's been 5 years, right? Or just, in 2017, the baby was only 1 and now the baby's in first grade, right? Anybody going through that? Like, I go through it all the time. Time freaks me out. Time is fascinating to me, how it goes by so quick. It just sneaks by you. All right, so process this for a moment. This is the crazy part. This is the game changer. This is the opportunity that you have to really, sort of go far ahead of the curve of everybody else. In 2017, almost nobody was talking about 2022. In 2017, 2022 was not interesting at all. 2022 seemed like it was way off in the future. 2022 to 2017 is what 2027 is to now. If I'm running around talking about, okay, this is what you can do to prepare for 2027, people would look at me like I'm crazy. They would think that I'm not talking about anything that's relevant. They would think of 2027. When they visualize 2027, they're visualizing flying cars and robots everywhere and aliens, and right. They're really, 2027 seems so futuristic, but it's not. It's not. It's literally 2027 is to 2022 what 2022 is to 2017. So if you think about this, imagine where your life would be financially right now if just a few years ago, just 2017, you had really, really buckled down and started investing in the things that were gonna make your life amazing in 2022, right? You started investing in your stocks, maybe started working out and losing weight, maybe started that business class that you've been putting off for a long time, so you can learn how to, program computers or whatever it is you want to do, right? Right. So what I'm trying to get you to understand is that a good investor can see 2027 as if it's right now, because 2027 is cheap right now. Whatever is going to be amazing and lit and expensive, and Bitcoin, maybe Bitcoin's $105,000 in 2027, right? You're going to look back at 2022 and you're going to remember this conversation. I hope that you do. And you're going to say, wow, I can't believe that the 5 years went by that fast. How do I know? Well, because in 2017, I was sitting in the same chair, giving these same analyses, breaking things down exactly like I do right now. The only difference was I was a little fatter, because in 2017, that was when I started running, 5Ks and marathons. That's it. But I was literally sitting in the same office in 2017. So just realize that if you can visualize 2027, then you're going to be well ahead of the curve. So start making your investments now and make 2027 your year. All right. Okay. So two more questions, and then we'll bounce on out. What's the best stock app? I'm using Robinhood. I think Robinhood's okay. I think using multiple apps is good. I like E-Trade. Let me see. Stash and Acorns aren't bad. Fidelity is good. Ameritrade is okay. So those are some of the better apps. So there's some good ones out there. Let's see. Well, one thing I don't do is I don't put all my stocks on one app. That's one thing, because I don't trust these companies. Like, if they go bad or they end up, I don't know, if they get hacked or something, then next thing you know, all my data is out there. So, Rarick, do you think the stock market is going to keep about the same for the end of the year, and in 2023 we're going to be on a roller coaster? I think 2023, a lot of things still have yet to be worked out. The market correction, a lot of people believe that it may not be over, that you could still have more correction to occur in 2023. I don't know. I don't know how I feel about that. I don't know if I agree with that. What I do agree is that there is probably going to be a recession in 2023. I don't think it's going to be the end of the world, though. I think that the market, most estimates I'm seeing, most analysis I'm seeing, is predicting a very strong stock market in 2023. So there you go. Cash App. What do I think about Cash App? I think Cash App is an okay place to buy some stock. I think I like Cash App because I can, like, buy the stock easily and I can show it to the kids. Like, we're in line at Starbucks or McDonald's or something. I can literally explain stock to them by buying shares of stock at McDonald's while we're there, and I can say, hey, guess what? We own a piece of McDonald's now. That's pretty fat. That's a pretty cool magic trick you could try with your kids to get them interested in investing. I think that kind of stuff really does work. I know it works because I've seen it work. So anyway, guys, I'm going to get on out of here. And if you want to learn about our business school for kids, just go to blackmillionairesoftomorrow.com. That's blackmillionairesoftomorrow.com. We're really excited. We actually just created a crypto certification for children. So you can go take a look at that at blackmillionairesoftomorrow.com. And also, we just created some new flashcards as well, some real estate flashcards. Those won't be available until January, though, but they are on their way. And if you want to take a look at our flashcards, you can go to financialflashcards.com and do a pre-order if you'd like. All right. So have a good day, everybody. It was great to see you, and God bless you. And if you want to see the recordings of all the lectures and the stocks I picked for the week and stuff like that, just go log in at theblackstockmarketprogram.com, THE, theblackstockmarketprogram.com. Have a good one. I'll see you guys later. Take care now. Bye-bye.